If the market sold off, we saw buying kind of flood into the ETF structure. So I think that muscle memory is very much alive and well. Right now, I think it's showing me that even buyers and the investors of the ETFs have actually been the smart money because, here we are a few weeks later and S&P 500 is back up at all-time highs.
If you could sit in a room and really watch where Canadian investors are putting millions of dollars every day, what would you learn? So our guest today gets pretty close to doing exactly that, but a lot more than just sitting in the room. I'm joined by Valerie Grimba, Director of Institutional Sales and Strategy and ETF Market Maker at RBC. And Val joins me today to walk us through really what we can learn from the trends and flows that she's seeing shape the ETF industry today. Before we get started, a quick reminder, we're not providing any investment advice or recommendations. These are just really our observations to help provide you information and education around trading and investing in ETFs. Val, welcome to the channel.
Thank you so much for having me, Erin.
It's great to have you. So you really do have a unique vantage point across the entire Canadian ecosystem, which really does give you sort of that insight into where money's going, what trends people might be missing, what's gaining traction. But for viewers who might not understand it, let's get a quick overview of what your job is as a market maker, because I simplified it a little, way too much, I think, at the beginning.
Yeah, sometimes I joke that we're like the Wizard of Oz in the ETF world, and that we kind of sit behind this curtain of mystery, and we facilitate a lot of what happens on the underlying trading of ETFs. And because of that, we do get this really neat intersection of all the different ways we look at the ETF ecosystem at large. And so we help support ETF issuers like BMO ETFs who want to create new ETFs, bring those products to market, and provide that intraday liquidity that ETF investors expect. We also work with users of ETFs or people that want to trade ETFs. So we get really interesting insights into retail demand, into what institutions are doing and how they're trading ETFs, and then further helping them talk about what the best way to execute ETF trades look like and help advise and consult on that front as well. So really the gamut, and we get to see kind of the flows before they're actually printed to the tape.
Yeah, you guys are experiencing this explosive growth in ETFs, front row center, seems to be breaking records year after year. What are you seeing in 2026 in terms of flows so far?
I mean, at this point, I've been making the joke, it's a broken record of broken records for a year and a half now, and it still continues. So I'm a little bit like the boy who cried wolf in that respect, but it really is kind of insatiable, and demand is across the board. And so I've also been calling it kind of the kitchen sink interest. And so we're seeing a pickup of interest from DIY individual investors. Advisors are also increasingly turning to ETFs to problem solve within their portfolios. And then we're working more and more with institutions who are kind of coming over to the dark side and seeing the benefits of ETFs, things that we've known and loved about the structure for a long time, but they're now kind of coming through and using them themselves. And it requires a bit of an education piece where, again, we can help liaise with these big institutional traders and talk about how they can best implement ETFs even in their large size portfolios. And then we're also seeing it, so like that's on who's using ETFs, but we're also seeing an increased demand across the board in the types of ETFs, and that is also a bit of a everything everywhere all at once rally. So we're seeing continued demand into US equities. That's been kind of where the money's been flowing for the last 2 years. But on top of that, so far in 2026, international equities have actually been the biggest category with inflows this year. And then, not to be outdone, Canada is actually second. Canadian equities is actually second for the amount of fund flows. So it's kind of like all geographies are seeing strong inflows. We're also seeing demand across asset classes. And then not only that, we've got this record launch of products. So we're seeing different products, different kind of subcategories, sub-asset classes, also seeing inflows. So it's kind of across the board, and that's lending to this really insatiable demand and growth in the ETF wrapper at large.
I always wait with bated breath for the monthly report because I don't get to sit in front of a Bloomberg terminal and figure out what's going on like you do. But are there, what would you say the biggest themes or trends are showing up this year in flows?
Yeah, so definitely a continuation of search for yield, and I would say even like at the expense of fixed income to a certain extent. And so we've seen a continuation of the trend where equities are doing well and the bond market also does well, but the vice versa is true as well, where they're moving correlated to the downside as well. So fixed income isn't providing the cushion that I think historically it was known to provide within portfolio construction. And ETFs, I think, have really been there to kind of bridge that gap. And we're seeing different innovative solutions that were previously only the domain of very sophisticated capital or institutional money. As we're seeing a variety of different types of payout structures and strategies come to market within the ETF structure. And I think we're seeing a lot of individual investor demand and advisor demand pick up to get these kind of more sophisticated strategies that provide some level of capital preservation alongside yield, and kind of looking at a different way to complement what they're already investing in. The other thing that's really been a key trend of 2026, of course, is asset allocation ETFs. Again, this is primarily the world of individual investors and advisors, but just continued adoption there. And again, I think they kind of prove their use cases in a variety of different ways. So you can use these ETFs as kind of a core holding and build out satellite positions around it. We're seeing people use them for simple accounts, set it and forget it themes, whether it's a child's RESP, something to that effect. And again, really this kind of movement towards a single ticker solution that's going to be a one-stop shop and be cheap and accessible for them to get access to that.
All right. So payouts and all-in-one simplicity is kind of the key there. I've been having a lot of conversations about our target cash flow units of our ETFs as well as sort of a newer innovation on the scene. Seems to be this insatiable need for income or cash flow in the market.
Yeah, I think it's like resonating with what investors are trying to problem solve for, right? And so there's, again, a variety of different scenarios, very bespoke individual scenarios too, between 200 different individual investors. But if they're looking for a specific payout, then those funds can meet that need and fill that void. So I think we're just, again, seeing continued innovation within the ETF structure as well. And more choice is always better for the end consumer because they can get the product that is tailored to specifically almost fill their specific goals.
What are you seeing sort of on a shorter term basis? Are there any trends or pockets of activity that starting to emerge that you're keeping a close eye on?
The one thing that kind of consistently surprised with is the investor demand, especially amidst market weakness or market volatility. July was a very volatile month. I think at the end of the day, the S&P 500 came out kind of flat, but there was a lot of movement under the hood over the course of the month. And there was this really consistent trend that if the market sold off, we saw buying kind of flood into the ETF structure. So I think that muscle memory is very much alive and well. Now, sometimes you'll hear criticisms of this and like maybe this is a flaw or a potential thing to be like a warning sign or canary in the coal mine. But right now, I think it's showing me that even the buyers and the investors of the ETFs have actually been the smart money because, here we are a few weeks later and S&P 500 is back up at all-time highs. So anyone who bought the dip along the way, even any dips across 2026, has arguably at this point on August 10th done well and they're up. So I think that trend very much remains alive and well. We also saw that in semiconductors, that sector contracted over 20% in July, but it saw nearly $30 billion of inflows in the US. So again, incredible buying momentum into a sector that was hit hard. Now this kind of like also pushes into something that we talk about a lot now. With that all-time highs, are valuations looking stretched? Is there some froth that needs to come out of the market here? And that's where you need the crystal ball. But definitely from the ETF lens and a flows perspective, there's been undeniable interest. The other area here in Canada, of course, is Canadian banks. They've also been on an 18-month run. Very, very impressive move, but we've also seen continued demand, especially into ZEB. I think the last 2 months it's been at the top of my charts when I look at monthly inflows. So again, I think the simplicity of ZEB, where you get to own all 6 Canadian banks, within the single ticker kind of solves that need for a lot of people. And then we're also talking to clients about potentially looking tactically at rotating into a covered call ETF. So this would be ZWB, where you get the call writing strategy and the call writing overlay, which would provide a bit of insulation or potentially some protection if the Canadian banks kind of move sideways or don't appreciate at the same rate that the current cooking rate that they've been at recently.
People love their Canadian banks. What about from a sector or a factor perspective? What are you seeing there?
Yeah, we're definitely seeing continued demand into dividend ETFs. Again, I think it's this, we're kind of in this mixed rate period and people are kind of unsure what the outlook on that side. So they're looking for alternatives, again, to bolster yield or income that's generated out of their portfolio. So we're seeing consistent demand in dividend factor ETFs and actually seen a pickup, I would say, in the last 3 months. We've seen, I would say, kind of steady demand between both value and growth, which is interesting to me. But I think, again, people are getting these complementary factors and they're kind of picking their spots and depends what side of that fence you're on. But I think there's also reason to right now in the current market conditions own both of those factors. Momentum has had a very big move, but it's also had a big move off the boil as well. But we've definitely seen fund flows kind of follow the curve there because the momentum strategy moves pretty quickly. So as stuff was moving higher quickly, we saw momentum inflows, and I've seen since some rotation out, as again that market underperformed in July. So definitely a lot of things happening on the factor side. On the sector side, so yes, sure, Canadian banks. We've seen also a lot of recent interest in utilities. Again, I think this is a bit of a yield play and people looking for opportunity and kind of looking to this like boring, slow moving sector as another opportunity and one that hasn't really participated in the same extent to recent appreciation. And then, of course, it's kind of steady, but tech sector and NASDAQ 100 ETF exposures have also been seeing inflows in the last 2 months.
Yeah, we can't talk about ETF growth without talking about AI and thematic investing. When, like, I know thematic investing has also been on the up and up. Is that mostly driven by the AI story, or are there other themes that investors might be overlooking?
Yeah, what I'm seeing now on the theme side is definitely AI. You can't run away from it. And people are looking at different ways to segment and think about AI. And so it's like, okay, are you owning the companies that are going to be the beneficiaries from AI rolling out into their businesses? So that might even be something as simple as Costco, like using AI in their procurement process. Or are you owning the companies that are participating in manufacturing of AI? So this is kind of maybe more the chips and the memory chip makers. And then maybe you're looking at the people that are even building to support that industry. So that's like a little bit one step further. So that's, maybe it's the data centers or maybe it's the electricity grids out there that they're building to, again, facilitate how AI is going to kind of translate into the real world. And then there's a fourth bucket, which is people that are using AI in their actual investment process. So using large language models to kind of work through all of the information that we have and try and make investing decisions based off of that technology. So there's again, already so many different ways to slice it. So it's important when you're looking at a thematic ETF that might have AI in the title in some capacity is understand how it's approaching investing in that theme. The other trend that I'm seeing a lot from like a product creation standpoint, and we have a lot of these conversations with different issuers when they are kind of thinking about product design and like what to include in their products. And I think we're going to see continued advancements in kind of micro themes or more bespoke exposures within ETF. So previously, if you had like a spider sector ETF in healthcare, you owned 400, 500 stocks. Now I think we're going to see ETFs start to come to market that maybe own 8 to 12 very specific. So maybe it's like telemedicine or teledoc. So you're bullish on that theme. You don't want to go all the way down the healthcare spectrum and own a company that makes, I don't know, defibrillators, but you can just really hone in on the very specific investment exposure that you want. And I think this is a little bit of an untapped piece in the market and that we're going to see continued rollout of more bespoke theme ETFs.
Hot tip. Thanks, Val. We'll take that away from BMO.
Yeah.
I'll put you on the spot a little bit here, but I want to bring it back to ETF products and get your thoughts on sort of, I guess, what's one of the most underrated or misunderstood or ETF in Canada today? What's on your list there?
Yeah, the one that I really think is really great is ZLSU, which is the BMO US long short ETF. And so this kind of gives you a hedge fund like exposure within an ETF for a very, very fractional cost than you would get to kind of invest in a similar strategy anywhere else in the market. So you're paying only 73 basis points to access a very sophisticated strategy, and you get to benefit from BMO's team that is actively running this portfolio. They are running both a long portfolio and a short portfolio, which just gives you that bit of leverage. And again, this comes at a cost. So typically, if you are running your own long short portfolio, you have to pay margin, and you're going to pay a lot higher rate as an individual investor. And so you get to the benefit of BMO's institutional rate. And then if you're trying to do this and invest in a hedge fund itself or a similar type structure, you're going to end up paying way more than this management fee plus likely performance fees on top. And so I think it's really kind of clean cut, transparent access to a really complementary strategy that can be added to a portfolio, especially if you're looking at markets at all-time highs like they are in the US. You get exposure to the US market through this ETF, but you also get that short exposure as well. So if there's any kind of tight drawdowns or sustained drawdowns, that short piece of the portfolio should offset some of that overall weakness in the market. So it's something that we talk about a lot, and you can take a look at its performance, and it's been really, really strong performer since its inception about 2 years ago. So I think that's a misunderstood product that doesn't get as much love as it should, and is also worth someone's consideration and time when they're looking at markets at all-time highs and thinking about how they're going to tactically position that exposure going forward.
Awesome. Thanks for that. Yeah, maybe rotating into some alternative strategies to give you a little bit more protection. I want to finish it off with a rapid fire session. I've never done this before on the channel, Val, so bear with me here.
Okay.
For each of the following categories, tell me, are flows growing, slowing, or stable?
Okay.
I know the first one, AI.
Okay. Growing.
Easy one. Lay up to
Yes.
start.
Yeah, thanks. Warm up.
Infrastructure.
Also growing. Yes, we're seeing a big pickup, especially since Trump has taken the reins in the US. There's been big spending over there, and so definitely seeing it in pick up in interest in infrastructure and industrials.
Energy.
Increasing overall, but it's definitely is a geopolitical play as well. So we've definitely seen a lot of movement and volatility in 2026 that's kind of corresponded to what's going on in the underlying oil price. So mixed. I don't know. Is that an option?
Stable.
Like
maybe.
it? Yes, stable. Okay.
Or volatile. Yeah.
Yes.
Healthcare.
Growing. Healthcare has really been an underperformer, but I think there's interest now at these levels and as a diversifier across portfolios.
Yeah, underrepresented. Gold.
Yes. Mixed as well. But I would say as of recent, in the last week or two, we've seen a pickup back into both gold equities and physical gold bullion. Kind of found a floor around the $4,000 level, and now it's trading higher to $4,200 an ounce. And we've seen definitely increasing inflows back into gold and gold equities.
Cover calls.
Growing. In perpetuity, forever, always growing, never not growing.
Digital assets.
Stable. Again, ups and downs, but the trend line will be relatively stable. And I think that's impressive, especially given the price move has largely been negative.
Yeah. And what about asset allocation or all-in-one ETFs? Another layup for you.
Growing to the moon. It's a rocket ship. I call it the Pac-Man of ETF flows, because every day this Pac-Man is just taking in more and more assets. Yeah.
Awesome. Thanks for playing along with me, Val. And thanks so much for joining us today and all your great insights, giving us that behind the scenes look at what you're seeing across the ETF landscape. Hope you'll come back again soon.
Awesome. Thanks, Erin. Thanks so much for having me.
That's all for today. Comment below if you liked today's video, and can't wait to see y'all next week. Bye for now.